these are high interest days in the markets. Everyone asking what can come in the budget. Can the markets go to 8,000? Can the markets go to 9,000? Will they peak off on budget day? As Ambit was very effectively arguing. For all those questions, let's welcome our first market master of the day, Saurabh Mukherjea, CEO, Institutional Equities at Ambit Capital. Good morning, Saurabh, and really sorry to pull you out of your morning meeting this quickly, but there's so much high interest and expectation. Well, first up, the rail budget. How closely would you watch? Are you expecting some out-of-the-box ideas already from the Modi government in terms of really pulling up railways and the infrastructure into a new plane?
I think both the railway budget and the budget proper, both of them will be watched not just for the announcements they make on outlay, but for their planning for the years ahead. How much of a vision do they have for India? How exactly will they strike a balance between...
But can all that come in, 60 days or even less, 50 days of being in government?
I think there isn't that much they can actually do for the current fiscal. I think the die is broadly cast for the current fiscal. All they can do, and I think that's what both the budgets will try to do, is lay out roadmaps for the next 3-4 years. I think that piece they would have prepared for fairly well even before the election results were announced. I think the vision piece, the roadmap piece, is in a way preconceived to some extent, and they'll lay that out. And I think that's probably the crux of both the budgets. In terms of the current year, it's not as if India is spending a lot of money. It's not as if the government's expenditure is particularly high. Will the rail budget and in the main budget will be swing the balance of spending away from revenue expenditure and towards capex. Railways, obviously, there's a great deal of interest in understanding things like not just the Delhi-Mumbai industrial corridor, but also the Eastern Freight Corridor. Will we get some announcements on the Eastern Freight Corridor, especially since the Prime Minister is going to Japan in July, and Japan has been a steadfast ally of India in these rail projects.
So would you buy any railway stocks now?
That mode of investing is somewhat alien to us at Ambit. I know there's a sort of certain school of thought out there that you buy things like Titagarh wagons and so on. Honestly, I've never quite understood that. We've seen stocks as long-term cash flow generators, so one or two events I don't think is the big issue. But where I would look at in a very constructive manner is the construction sector. So companies like Sadbhav Engineering, like Ashoka Buildcon, road builders have been of great interest to us. But if the railway budget today gives an emphatic signal that the Eastern Freight Corridor is on its way, then I would look at Concor as a company that you can play the logistics story through. Logistics, I suspect, will be one of the big stories in our country over the next 3-4 years as the economy takes off, as e-commerce takes off. Unfortunately or fortunately, Concor is probably the one large logistics play, solvent, viable logistics play that I can see out there. The private sector companies are in various degrees of distress in that sector.
Okay, what about just buying the index? After all, this is improving infrastructure. It's improving productivity. What are your targets for the Senate? In case you get a budget, the rail budget, and maybe even the union budget, which shows some penchant, some stomach for, out of the box, or at least brave ideas. Would you up your target? What is your Sensex target or Nifty target now? And how much might you upgrade it?
So, Latha, as has been the case for the last 3 or 4 months, our Sensex target for the current fiscal, the end of the current fiscal, has been 30,000. We're sticking to that. My hunch is at the Sensex target level, I don't think we are particularly concerned. I think that there is good grounds to believe India will now have a fairly reasonable recovery over the next couple of years, and the stock market will give you good returns. My concern is more about the high beta names, which have had a good couple of months. I think that's where there's a potential for pullback, given just how much the high beta names have run up.
Since you gave us
TVS Motors, that's one of your top picks as well, and that's rallied about 100%. So just spoke about some correction in high beta. Would that be a space where you'll book some profit?
I wouldn't worry so much about TVS Motors. I'm worrying more about the telecom companies, the construction companies, which have raised a lot of money in the last couple of weeks without the underlying fundamentals quite justifying it. TVS, actually, I'm not that worried because the balance sheet is in good shape. The company generates cash flows consistently. The Southern Indian franchises, I would say, are right up there with Hero Bajaj, and the R&D team seems to have got its act together. In TVS's case, I think there's some way for the stock to run, but it's the broken balance sheet names in construction, in telecom that I'm more concerned about.
Specific names?
I think we don't have coverage of a lot of these companies because of the broken balance sheet nature, but my concern is, say, names such as, say, a JPA or the GMR GVK lot. A lot of these companies will need deep repair of the balance sheets. Now, it's reasonable to expect the process to begin now, and it has begun now. What I'm still trying to figure out is how much money can someone make if they invest early in these names. That is a non-trivial question, I think.
Okay. Since you gave us a lot of the pre-railway budget buys in the logistics sector, etc., before the union budget, what are the stocks that you would be bullish on, where you can, have a fair degree of certainty that despite whatever comes through in the budget, it will be a positive for these stocks? So your pre-budget buys.
As I was saying, I think event-specific investment is not particularly easy to do, and I wouldn't profess to be an expert. We're sticking to our point of view that we've had for the last year, that buy good quality cyclicals, buy small and mid-cap cyclicals, and buy small and mid-cap cyclicals where the balance sheets are in reasonable shape. So from that point of view, names such as Shobha Developers in Construction, Prestige Estates in Construction, Shobha Developers and Prestige in Real Estate in Construction, the names I spoke about 5 minutes ago, Sadbhav and Ashoka Buildcon. In auto, TVS Motors, Balkrishna, and finally in banking, City Union Bank, LIC Housing Finance. That's how we're going about it. That's how we've gone about it. Take 4 or 5 cyclical sectors, take a couple of good small and mid-cap companies from each, and invest consistently through the rally, and I think you've got a reasonable chance of making a healthy return.
Sorry, go ahead.
So two of your stocks which have again done well, and again would be part of these pockets, so Ramco Cements and Apollo Tyres. How would you approach these names now?
So Apollo, we turned sellers on a week ago. I think it's had a tremendous run in the last year or so. I'm sure the AGV cycle will recover in the next couple of years, but I think Apollo already factors in a big part of the CV cycle recovery. Ramco Cements, we remain buyers of. It's still at a 15-20% discount to the cement frontline names, and I think the company's got good demand prospects both in southern and eastern India. So Ramco, I would stay a buyer of for some time to come.
Sort of Concor is a big fat stock already, and it's doubled in the past year. Your views on that, as well views on all those construction companies. Even Hindustan Construction, IRB Infra, all of them have trebled in the last year. You will argue from penny stock levels, but at least in the case of HCC. Yeah. But which construction company?
So I would say, look, I think Concor we feel fairly comfortable with. I appreciate that it's gone up a lot, but I think from price to book perspective, it's still at very reasonable levels. And you have to remember both on the Delhi-Mumbai Industrial Corridor and I suspect eventually in the Eastern Freight Corridor, which I think we'll hear more about in the next couple of months. This is the only company making investments in warehouses. These two railway lines, the Delhi-Mumbai Industrial Corridor, Delhi-Mumbai Freight Corridor rather, and the Eastern Freight Corridor will become sort of almost spines of our country. And this is the only company building assets on it. This is the only company with the balance sheet and the wherewithal to build assets on it. These assets will become very valuable in the years to come. They'll depress ROCs and ROEs for a couple of years, but 2, 3, 4 years out, they'll be incredibly valuable assets. So if you're getting a company like this at book value, then I would say it's worth taking a very close look, especially if the India government does a better job of running PSUs than its predecessors have done.
Okay, one final question from my end then. If we do see a post-budget correction, as many people are talking about, what could be the extent? What could be the floor for this market?
I think the post-budget correction, if one comes, is most likely to come because the high beta names have run up a lot. If you look at what's happened, is consensus earnings have gone up, I think somewhat without justification. My hunch is Sensex FY15 and FY16 EPS will get pulled back after this earnings season because people will realize the economy is recovering, but at a very slow pace. So I think there's a reasonable chance that we'll see disappointments in earnings in several sectors. And as earnings pull back, I think there'll be a degree of jitteriness about the broken balance sheet names, about the high beta names. That itself could pull the market down by, say, 5, perhaps 10%. But I really am not that fussed about that pullback. Our advice to our clients is steadfast. Buy high quality small and mid caps, buy on corrections, build up these names because over the next 3 or 4 years, good quality cyclicals and good quality small and mid caps will give you very healthy returns.
Okay, a very quick last question. Do you expect the global, Diwali in equity assets to kind of fizzle out? It's going on for too long.
It's a bit worrying, actually. You're right. The last 6 or 7 months has almost been like a dream for global financial markets. I think not just equities, actually, like bonds as well. The broken balance sheet European countries have had super runs in their bond markets. It is worrying, but there isn't that much we can do. Our concerns will largely be around oil in the Middle East and the Chinese Chinese economy, which remains as much of a black box as it has ever been, with no clear signs of a decisive recovery in China. But hey, if China struggles, that could hold commodity prices back and perhaps counteract the uncertainty in Iraq. So no, I'm no great expert on global markets, but you're absolutely right. It's been a remarkable 6 or 7 months from a global perspective.
Right, Saurabh. Pleasure speaking with you. And thank you very much for giving us that important perspective ahead of a very important week. All right, that's a view coming in from Ambit.